Good morning, everyone. This is Tara Sewell, internal wholesaler with Financial Markets. Thank you for your business and thank you for joining us today. Today, we are joined by Rob Johnson, Sales Vice President with Lincoln Financial. He has over 20 years of experience in the financial services industry and has been on the Lincoln MoneyGuard team since 2018. Rob holds FINRA 6 and 63 and state and health licenses.
Lincoln MoneyGuard. We're moving into our 34th year of this being our flagship hybrid solution. For many, this is the solution that all other carriers really compare their hybrid solution or their asset-based LTC solution against. We're coming off 2021 where we were, again, number one in this segment and that asset-based LTC segment in terms of total sales. And I think this MoneyGuard Fixed Advantage solution will really help us move forward and really maintain that market share. So let's dive in. What's different? What's staying the same? And let's first talk about where it's available. So MoneyGuard 3 has been our flagship product in all states except California and New York. MoneyGuard Fixed Advantage, as of the launch this week, is available everywhere except California, Montana, New Jersey. We're no longer in New York for either our life or MoneyGuard business, and then not yet available in the Virgin Islands or Guam. My friends in compliance wanted to make sure I added that. So again, I anticipate Montana and New Jersey coming soon, but Fixed Advantage is replacing MoneyGuard 3 in all those other states. So the story stays the same. MoneyGuard Fixed Advantage is still that story where we talk about whether you've heard it as live, quit, die. I like to always look at it as leverage, legacy, and liquidity. And you can see the piggy banks on here. The reason folks buy a hybrid or asset-based solution like MoneyGuard, and there's a variety of other quality carriers that have solutions like MoneyGuard, and not every solution is going to be all things to everybody. But MoneyGuard is going to offer primarily LTC benefits. That's the reason folks buy a solution like this. The biggest piggy bank will always be that LTC bucket of money. I know there are life with LTC riders or chronic illness riders on there, and typically that LTC benefit is a percentage of that death benefit. But that percentage, that LTC benefit's not growing to keep up with the cost of inflation and the cost of care. So with MoneyGuard, the biggest bucket is always that long-term care bucket. Legacy with MoneyGuard, and I know there's solutions out there where the death benefit's sometimes less than the premiums paid. With MoneyGuard Fixed Advantage, that death benefit can never be less than what you pay in. And then, of course, the death benefit or the liquidity, there are two ROP options, one that offers 70% return of premium and one that offers a vesting schedule where after year 10, starting in year 11, you could get 100% of your money back. I'll tell you right now that about 96% of folks that buy MoneyGuard chose option number one with the 70% ROP because that piggy bank on the far left-hand side is considerably bigger. And let's look at that on the next screen. So this is an example real quickly, a case study. This is Susan. Susan's 55. She elects to buy a MoneyGuard Fixed Advantage, showing $10,000 a year for 10 years. Now, yes, well, not all of my clients have $10,000 a year for 10 years. The minimum for MoneyGuard Fixed Advantage is enough to support a $50,000 death benefit. Let's see here. Enough to support a $50,000 death benefit. So I appreciate you sliding over to that. So that I've shown a 6-year benefit period with a 3% inflation rider. So let's go ahead and move to the next screen. Tara, I appreciate your help. So you can see option number one, monthly benefit at age 85 is $9,094. If you chose that one with a vesting schedule, it's about $7,500. All in, if we look at what's the total pool of dollars around age 85, and last year, just in case you're wondering, when do people typically use this? Our average claim last year was age 83. So you can see that about $115,000 difference in terms of a total bucket of money, depending on which vesting schedule. And then obviously the death benefit, there's a little bit of a discrepancy, and then ROP. Most folks, again, that are buying this type of solution are buying it primarily because of long-term care. And so most folks go with option number 1. Benefit durations are, you can go anywhere between 1 and 10 years for MoneyGuard Fixed Advantage. And one of the things I want to make sure I don't forget is, unlike most long-term care solutions out there, most life with LTC, there is no tobacco rate class. We only have 2 rate classes. If you're married, you get the couples rate, the couples discount. If you're single, you get a standard rate. So certainly there's a niche there for any smoker clients out there because we're not dinging them for being smokers. So Tara, go ahead. Let's look at the next slide. What makes MoneyGuard Fixed Advantage different? The big difference, if you're familiar with MoneyGuard 3, is the addition of our benefit transfer rider. We wanted to give those beneficiaries more control on how to use that death benefit. So up until this point, the only option for the beneficiary was to take the death benefit. We're now going to give that beneficiary 3 options with BTR. So they could take the full death benefit, or they could take that death benefit and enhance their own policy. So, and then we'll dive into that more, or they could take some of that death benefit and use the remainder to enhance their own policy. So if we look at the next slide, how does this work? Here's what's nice about it. If I take that my spouse passes away and I decide to enhance my own policy, I have the ability to increase my own long-term care benefits, increase my death benefit, increase the duration of my benefit period, and increase my surrender value with no additional underwriting when benefits are transferred. What does that mean? That means me as the beneficiary, if I have a MoneyGuard Fixed Advantage policy, I could already be on healthy, I could be 85, I could even already be on claim. And Lincoln's given me the opportunity to enhance my own LTC policy. We also give those beneficiaries the option of how to use this, not today, but just at the time of the death of their spouse or the individual that they have the joint policy with. So they don't need to make the decision today. We allow them to make the decision then, because their situation might be quite a bit different than it is today. So at that time, they can decide what to do with the death benefit. Here's what's also nice is we will, if you decide to enhance your own policy and you add, say, $150,000 to your pool of money, that new total amount, so your existing benefits plus the amount that came over, if you have an inflation rider on there, that total amount will compound. So that's really great. So let's look at an example on the next slide. So on this example, I've shown a beneficiary electing to utilize benefit transfer rider. And again, when I say benefit transfer rider, this is a built-in feature. They're not electing this on the application. It's automatically included. But in this case, I've illustrated $100,000 coming over. You could see in the second column, the surrender value when we knew it was 70%, right? That basic option 1, their surrender value jumps to 158. We leverage those dollars. So now their death benefit, their individual death benefit went from $100,000 to $208,000, essentially moving it from an individual policy almost to like a second to die policy. And then we're taking the LTC benefit, and this is the key to it. We're moving from $521,000 to the very next year being at $690,000 of LTC benefits. You could see by age 90, if we look at age 84, having about $500,000 in LTC benefits, by age 90, we're already at $800,000 of LTC benefits. And my friends at Financial Markets are able to illustrate this for you. It can be included in the illustration so the client will know exactly what they would have. Now we're guessing on how much death benefit might be available to move over, but we can at least illustrate, hey, let's assume we had $50,000 or $75,000 of death benefit at age 80 or 85. We can illustrate that and they'll know exactly what they would have. The monthly benefit remains unchanged. but we're looking at increasing that surrender value, the LTC benefit, and the death benefit, and the duration. So if we look at the next slide, you'll see for no additional cost by utilizing this rider, Mary grew her LTC benefits by more than 30%. Her duration went from 6 years to 7.5 years, and her death benefit went from $100,000 to $208,000. All at no additional cost, no additional underwriting, and she's deciding at that point what she wants to do. And again, she could say, I need $50,000 or $40,000 in death benefit today, take the remaining $40,000 or $60,000 and enhance my own policy. That's the option she can make. The only rule that we have is there needs to be at least $25,000 of death benefit to utilize, available to utilize the benefit transfer rider. Really unique. It's the only solution of its kind in the asset-based space. And again, you don't even have to elect it on the application. This is all built in. Let's look at why Lincoln and why we have the market share that we do. One of the key features, and this again, unique to Lincoln, we're the only carrier in this space that has a true 0-day elimination period. If we said the average cost today for a 90 days at home was about $19,000, and assisted living about $14,000, $15,000, nursing home $27,000, and in a lot of states these are actually low numbers, because I see numbers. I live in Minnesota. Private nursing homes are running $10,000 to $12,000. So again, we're being conservative here. But if we look out in the future and only assuming a 3% annual increase in cost, and I think most of us would agree that we would anticipate the cost of care going up by quite a bit more. In fact, the last 2 years it's gone up anywhere between 4 and 7%. But if you had a 90-day elimination period, that would essentially mean you'd pay $35,000 to $66,000 out of pocket during that 90-day elimination period. Where with Lincoln, all benefits, nursing home, assisted living, home care, hospice care, adult daycare, all of them have no deductible. And that's key, because if I'm buying this today at age 60, am I going to remember 15, 20, 25 years from now that I have to pay out of pocket the first 3 months? With Lincoln, we're not putting anybody in that tough situation. We know that once they qualify for benefits, they're available day one. If we look at the next slide, the other enhancement we've made to MoneyGuard Fixed Advantage, and this is an enhancement over the change we made last summer. We used to offer up to 1/3 of the benefit in cash for informal care. So if my wife was taking care of me, I could get 1/3 of my benefit in cash. Now we've moved that to up to 50% in cash. So depending on how many days of informal care per month, that would determine how much cash I got. But if my wife took care of me all 30 days during the month, and that was part of the plan of care at the beginning, they could elect to just get $4,500 in cash without a home care agency coming in, without an assisted living or nursing home. So more flexibility when it comes to home care. Certainly if the next month they move to having a home care agency coming in, they have the full $9,000 available. Again, just providing a little more flexibility. We didn't offer any of this informal cash until July of last year. So certainly an upgrade in terms of what we're offering with MoneyGuard Fixed Advantage. If we look at the next slide, here's the other thing that we're doing. We know for a lot of you, long-term care comes up when the client raises their hand and says they probably had a personal experience with extended care, long-term care. We want to make the process as easy as possible. And typically in this hybrid space, that's involved sometimes ordering medical records, but typically with most of the competitors like MoneyGuard, it's been a phone interview. And that phone interview lasted 90 minutes or 60 minutes, maybe as long as 90 minutes. Now we're giving folks the flexibility to answer those health questions online at home. So they'll get an email like this you're seeing on the screen. It'll be really clear we received your signed MoneyGuard paperwork. You can hit start. That link is good for 10 days. And what's nice, if we keep moving through these slides, they'll verify who they are. They'll do validation. They keep moving forward through this. They'll validate, they hit consent, and then they start the e-interview. We'll tell them what to expect, how long it should take. Typically, this e-interview or online PHI takes about 20 minutes to complete. Obviously, depending on their health history, if you have a really healthy client, might take 15 minutes. If you have someone with a little more detailed health, that could last 20, 25 minutes, 30 minutes. But this is an option that allows folks to continuously move forward. So if we keep just clicking through these, Tara, you can see it's, again, moving through these slides, yes or no. It's black and white. They'll be able to navigate. They'll see those answers, and they can print off a PDF of their answers. So it's not a he said, she said. They can have a copy of exactly how they answered those health questions. They can actually also stop this e-interview, come back and finish it later in the day. They could finish it 5 days later. They could take time to research the answers. They can do this 24 hours a day versus a phone interview where you're in it till the end and you're locked in. E-interview or online interview offers a lot more flexibility. Yeah, so e-interview, again, available for all ages. Now, like every carrier, I want to touch on this real quickly. Every LTC carrier will have some type of cognitive screen depending on the age of the client. We started at age 61. So all folks can do that PHI, that health history interview, over the phone or online. That's their choice. Everyone 61 or older will at least have to have a 15-minute cognitive screen. And some carriers start that younger. We started at age 61, but they could do the health questions online and just do a 15-minute phone call. Tara, I want to open it up to see if anyone has any questions and turn it back over to you.
Great. Thank you, Rob. Lincoln has really upped the game in the long-term care arena, and this is a great solution to cover the risk of a long-term care event, that 0-day elimination period. And now we have the benefit transfer rider. What great flexibility for a beneficiary. Let's see if we have any questions. It'll just take me a moment here. Here's one here. If I submit an electronic application, can my client choose to complete a phone interview if they're not comfortable with the computer?
Yeah, they can. Everybody can do the phone interview. It's up to them if they want to do a phone interview. They could even start the e-interview. And if they get to a point where they say, you know what, I'd rather just do it on the phone, they can at that point stop the e-interview and flip to a phone interview. So certainly that's their choice.
Great. One other question here. Can the benefit transfer rider be added to an existing MoneyGuard contract?
Unfortunately, it cannot. It is just for all policies moving forward with MoneyGuard Fixed Advantage.
Okay. Okay, great. If you have any other questions, I don't see any other questions in the chat feature there. Let me check one more place here. If you have any additional questions, be sure to reach out to your internal wholesaler here at Financial Markets or to discuss your next long-term care case. Again, Rob, thank you for joining us today and sharing this new information on this product features, upping the game in the long-term care offerings that we have for our clients. Hope that everyone has an amazing day. Thank you, Rob, and thank you for the producers on the call. God bless.